Hi, Andy. How are you doing today?
I'm doing good, my man. Thanks for having me back.
It's good to have you. So, for those of you that may be new to the channel or have not been following Andy, this is Andy Schectman. He is the president and CEO of Miles Franklin, and we're happy to have him here today. We've had some wonderful conversations in the past. So, at the end of the video here, we will end up putting a link to the playlist of the other videos we've done in the past. And what's awesome about having Andy on is a lot of his comments are happening, guys. Like, he seems to be kind of a time traveler, and so it's always fun to go back and watch some of the older shows and be able to see how some of these things are happening and what's going on there. But Andy, thank you for coming on today. And I know there's a lot going on right now. I put in the thumbnail that interest rates are going to be changing here soon, and how is that going to affect gold and silver? I'd love to get your opinion on that today. Sure. I've also been hearing a lot more about the unit coming out of the BRICS nations. And a lot of the things that you've been talking about over the last year, we're starting to see that be put down to paper, and it's starting to circulate around. And then I've been noticing that the economy seems to be slowing. Things like Disneyland and even going to restaurants or bars, I'm seeing fewer people at them. And I'm seeing that just in the numbers that it looks like credit card debt is through the roof, and a lot of people are trying to figure out what to do. And I'd love to see your take on what's happening with Miles Franklin. Are you seeing more buyers or sellers? Are things picking up? Are people kind of waiting for, for the market to make a change, or maybe for interest rates to change? But anyway, those are a few of the things that I wanted to throw out there for us today, and see if you could enlighten us a bit.
Yeah, well, first of all, as far as interest rates are concerned, I find it interesting that the Fed has been talking about a 2% inflation target for the better part of I don't know how many years. I've always thought that was strange, by the way. Why 2%? Why not negative 2%? Because, the lower the rate of inflation, the higher the standard of living. Why focus on 2%? But the information that comes out of the Bureau of Labor Statistics, I mean, we should just take the L out of the BLS and call it the BS for what it is. This is a think tank, if you will, that is able to just quietly revise 818,000 jobs, or if you take it into account the jobs that they revised during the year, over 1 million jobs that they told us represented this super strong economy have been revised into, no, I guess we were wrong, that they really never were 1 million jobs created. And in fact, one of the things that we've seen lately is that we've seen 1.3 million workers in August on a year-over-year basis being dropped as full-time employment. And instead, we've seen roughly 1 million in a year-over-year basis in August, part-time jobs take its place, many of which have been illegal immigrants. Since 2023, the full-time job count in the United States has fallen by 1.5 million workers, 1.5 million since June of last year. And when you talk about this being a strong economy, it's been 16 straight months of part-time job gains, the longest streak since 2008, the financial crisis. And so this is not a strong economy. When you talk about going to, Disney, when you see 1.3 million full-time jobs being shed and 1 million part-time jobs replacing it, many of which are in this country illegally, that doesn't speak to a strong economy. And at the same time, we've had, I believe, the onset of a recession. It's here. And there are two reasons I say that. Number one is the SAM rule, SAHM. And that's named after an economist named Claudia Sam, who basically had this theory that has proven to be right the last 9 recessions. It has a 100% track record. It identifies the onset of a recession by looking at the increase in the unemployment rate, like we're seeing now. And the rule is triggered if in the 3-month moving average of unemployment, it raises or goes up by 0.5%. Well, it's from its 12-month low. We're at 0.53 right now. That indicates that a recession is here if history repeats itself, considering it has a 100% track record. That's pretty pervasive. And at the same time, we have now seen the yield curve uninvert after the longest period of inversion since 1929. And as the curve uninverts and steepens, it signals the Fed is easing monetary policy because it's doing its best because of the rising unemployment. It's trying to cool things off by lowering rates. And this time is no different. And what I would say to you is that if you look at a yield curve uninverting, go back to 1950, it has predicted every single recession since 1950. It has a flawless track record 100% of the time. So, yeah, you can talk about why the Fed is lowering rates. By the way, unemployment is a lagging indicator. It typically is after the fact that the Fed lowers rates. They're always late to the show, whether they're wrong about things like the subprime crisis being contained in 2008. Bernanke says that, bang, a few days later it implodes. Or the fact that there was no inflation. Okay, fine, it's transitory. Okay, maybe it's structural. Okay, we've got it licked. And the funny thing is that the Bureau of Labor Statistics does things to skew reality, such as if steak becomes too expensive, they'll pull it out and replace it with hamburger. Or if coffee, which was up 80% year over year in April, got too expensive, they took it out and replaced it. I don't know with what, probably tea. And so that we're constantly being lied to about what real inflation is. And they understand this. They know that their numbers are fugazi, and that's why they have no choice but to lower rates as the economy is grinding to a halt. And, you know, it's one of these deals where if you just simply did nothing other than listen to John Williams of shadowstats.com, who tells you what the real numbers are coming out of the Bureau of Labor Statistics? He says just add an 8 to it. And if we have 3% inflation, no, we have 11%, because he measures it the way it used to be measured prior to 1980, when it started to get massaged and changed under Reagan to fit an inflationary agenda. So as far as rates coming down, ask yourself this question. We have a $35 trillion debt, right? And that is bigger than people comprehend. I always throw out this number because, you know, you live in California, and a average home in California is well over $1 million. So $1 million is something that isn't too big for people to comprehend. But a trillion seconds ago was 31,688 years ago. These numbers are too big. We are creating $100,000 of debt per second. 24/7. That works out to about $1 trillion of debt accumulation every 3 months. It took 200 years to do it the first time. If you Google what does the U.S. balance sheet look like, or what is the largest asset of the U.S. balance sheet, you will see the United States government, not the country, but the government has $5 trillion in assets, the largest of which is student debt of $1.6 trillion. It's 40% of the asset base of the U.S. government. We are broke. We are at 130, almost 130% of debt to GDP, about 125%. There has never been a country that's ever come back from 130 without either hyperinflating or outright defaulting. We're right there. But that doesn't even take into account Medicare, Medicaid, Social Security, and government military pensions, which exceed 200 trillion. So we're broke, we're insolvent, and we're going to lower rates now when we're not even close to our inflation number. This is a problem. This is what all governments have done. They've chosen inflation over austerity. So then ask yourself a bigger question. Who the hell wants our bonds of any length of maturity? Why would you hold bonds of a country that is massively in debt? By historical measurements, we're a banana republic, right? Anytime you're over 100% debt to GDP, back in the day when I started this company 34 years ago, you were a banana republic. But if you, at least this country has election integrity, judicial system integrity. Wait, maybe I'm not talking about this country anymore. And so the point of it is that's not lost on our creditors, the ones that buy our bonds. So we're all messed up internally with judicial, election, immigration, the wokeness, all of the massive irresponsible fiscal policy of spending 100,000 in debt every second. 1, 2, 3, 4, keep on going, and until you can't snap anymore, and then you can keep on going. And that doesn't even take into account the fact that we have $10 trillion worth of debt that needs to be rolled over this year and next year. We have to borrow money to pay back the money we already owe, and then to give away to other countries. Like, the Ukraine, where we've given, over $200 billion with no congressional oversight to this country as we're going broke. And so you have to ask yourself, yeah, you'd better lower rates because the economy is going to implode. But if you do, who the hell is ever going to trust you again to buy your treasuries of any maturity? You're broke, you're insolvent, you're massively going into debt minute by minute by minute, not stopping. And then you want to lower rates and incentivize people to buy your debt. So this is a problem. This is a problem where you're caught between inflation and austerity. How do you ever normalize your balance sheet? And if you look at what happens when countries try to, who mess with Mother Nature, and that's by suppressing rates, we tried it in 2019. What happened? The repo market blows up. We back off. You see the United Kingdom try it a year or two ago. And what happened? Their pension system blew up. They back off. You see Japan try to do it. What happens? The Nikkei blows up, and so does the Dow Jones by 1,000-point drop, the biggest one-day drop ever. And that Japan says, okay, well, we're going to back off. And then you see us try to do it, raise rates to 5%. The banks start to blow. Oh, we better back off. And so we're trapped between normalizing a balance sheet of an indebted system, Western system, or blowing up the entire system. And so what do you do? And it's what all governments have done since the beginning of time. They choose inflation over austerity. So yeah, it may cool things down a little bit in the economy and help the unemployment numbers, but in the end, it's only going to add fuel to a 5-alarm fire where asset prices have been blown out of proportion for years. Stocks are at all-time highs. Oh, yeah. Real estate is just a little bit above its 2006 peak, and yet we're now going to go back onto the inflation engine and lower rates and quantitative ease again. So as assets blow up and get more and more and more and more distorted, it's at the onset of our conversation, you mentioned to me there's a forest fire many, many miles out your back door. And that's what should have happened in 2008. They should have let the fire burn and let all of these companies fail and all of these banks fail. That's Mother Nature. Instead, the Fed's balance sheet went from 800 billion to 9 trillion. That 8+ trillion in bond purchases distorts the world. It distorts asset prices. And now they're not even able to back off $1 trillion off their balance sheet and quantitatively tighten, because what happens? It all starts to blow apart. So we got to pivot again. We got to go back to easing and lowering rates. This is something that will never get right until it all blows up. Mother Nature has to have her pound of flesh. And had we let that happen in 2008, the green shoots would have reemerged. We would be well on our way to strength through investment, savings, and reinvestment. That's a far smarter way of doing things than going habitually into debt and messing with Mother Nature through suppression of interest rates, which distorts asset prices and creates massive misallocations of resources and capital. It's like, companies that bought these massive buildings in 2008. What are they doing right now? I wonder. Where they're dying on the vine as these buildings are all being foreclosed and disappearing and working from home. And those distortions, those misallocations of capital and resources will at some point have to be paid back. Mother Nature will have to have her pound of flesh. And instead, we're doing the same thing we did in 2008. We're papering over the problem instead of letting things heal and letting companies and institutions fail and going through the tough times. No, we say, lower rates, make it easier to go deeper and deeper into debt and further screw with asset prices. So yeah, I think ultimately what you could see in this is stocks go higher than people can imagine, but it will lose ground as it has been for years now in terms of its number of ounces of gold, which continues to outpace it, which has increased by 9.9% compounding for the last 25 years. It's outpaced every traditional asset, and no one notices it. They just notice the stocks and the bonds and the cryptocurrency and all of the things that are sexy as gold, the tortoise in the race, continues to slowly inch forward, really outpacing everything. So I would expect gold and silver to do very well because they've been two of the only assets that have been held down as everything else has reached ridiculous levels. It's not a good thing for this country to speak to a low interest rate environment and a weak dollar. It's the opposite of what we need to fix our problems.
I agree, Andy. I mean, couple thoughts on this from what you just said. One, I've just sent my twin daughters off to college, and I live here in Southern California. It's a beautiful area where we're at. We happen to be in a little bit of a bubble politically, and there's a lot of prosperity around where I'm at. There's other areas in California that's not experiencing that same thing, so we kind of call it a little bubble here. The problem is as my kids get older and they want to settle down and they get married and they want a house, there's no way for them to afford anything near me unless I put up the money for it and buy it for them. And I'm not in a position at the moment where I can just buy a couple more multi-million-dollar homes here for them to live by me. So it's starting to put us in a little bit of a position where we have to start thinking, do we move out of the state? Do we go somewhere else where the kids can live by us and we can be grandparents to grandkids down the road? In addition to that, looking at the assets, you see things go in different trends and in different times. So real estate's gone up. It's gone way up. And to your point, as rates come down, it'll start to go back up. Same with stocks, but they may not go anywhere near as high percentage increase as things like gold. So just show you guys a Cougarand right there. It's kind of fun. Just picked that up the other day. And then you've got your silver right here. So here's some constitutional silver. And so talk to us a little bit about that. We've got rate supposedly a half a point to a quarter point, or 25 basis points or 50 basis point drop is supposed to be coming. A lot of people are asking, even in the comments, and I see people on the other just channels and other people that are talking, that they expect to see multiple rate cuts this year. What do you think may come next week? And do you think we're going to see multiple rate cuts this year? Do you think we'll see them into next year? And then kind of to the point in the vein that you were talking about, when we look at gold and silver, why do you see that those are being a good hedge? You already kind of alluded to it, but someone like me, how can I get prepared to help my kids a little bit more that are in college? Is it buying stocks? Is it putting money in a 401k? Is it maybe going and buying some gold and silver and putting it away for my kids for their future? What are some of the things you might recommend?
Well, first of all, yeah, I mean, the markets are pretty much pricing in a near 100% chance of a 50 basis point or 0.5% rate cut in the September meeting. And I guess the theory is either he returns to inflating the economy and throwing out more underpriced credit, or he allows the bubble economy to die. He doesn't want that to happen on his watch, I would guess. And so, yeah, I think that you will see at least one rate cut. Everything that we have expected. We were told at the beginning of the year that there would for sure be 4 rate cuts, and then in fact there weren't any rate cuts. And you had the Fed chair in Minneapolis talking about he thought there should be a rate increase, and I agree. I think they stopped raising rates too soon, and they should have let these banks fail. They should have let these institutions that have become over leveraged fail. And going back the other way is only going to weaken the entire system from underneath. Do I think there'll be multiple cuts? I don't know about that. I mean, yeah, I suppose that was what people will hope for. But I don't know that there will be. At some point, lowering rates will have a material effect on the Treasury market. We're already seeing that to an extent where, to me, it's less the curve being affected by the long end of the curve. It's more the forcing down of the rates on the short end. No one wants to buy our debt. And so you're seeing rates go up on the high end because there's just a lack of buyers. Who the hell wants to buy a 10 or a 30-year treasury from this country? And so, yeah, I think that if you don't fix your fiscal house, if we don't get this in order, it's one thing to talk about lowering rates. It's another thing when we're talking about $4.2 million per minute. Well, actually closer to $6 million per minute, depending upon what you look at. But you're talking $6 billion plus in debt per day, which is destroying this country. And if you lower rates at some point, the people are going to demand higher rates. in order to take our debt. And so this is a situation where the traditional forms of interest rate maneuvering by the Fed I believe, will end up losing significance. At some point, no one's going to want our treasuries anymore. And I think you could argue we're already there when you're seeing these countries like China, who was at close to 3 trillion in 10-year treasuries, now down to under or at or near 700 billion. And instead of dumping them, they're just not rolling them over. And instead, they're replacing it with things like gold, which has doubled the performance of the 10-year treasury, but lacks the counterparty risk. And, if this country had its house in order, not even fiscally, but just in terms of all of the institutions that made this country special, in particular, the electoral system, the judicial system, the immigration system, the lawlessness in the cities, all of the things that I harp on, then I think we could probably pull ourselves out of this nosedive. But even when you talk about Trump, if he wins, he's talking about, again, about imposing 100% sanctions on countries that want to move like to the BRICS. He's talking about devaluing the dollar, about super low interest rates. This is the worst thing that you can do. So I don't know that anyone will be able to fix our fiscal problems. You have to start by stop spending, number one. And I think the reason that I would like Trump to get into office is to fix the ills of the country from within. All of the things that I just mentioned, that is not lost on the rest of the world. What we are talking about right now in lowering, interest rates by 50 basis points is spitting in an ocean. It doesn't do a whole lot of anything, but psychologically it's bigger, that we are giving in to inflation. We're giving up on inflation, surrendering and saying we'll never fix inflation. And instead we're just trying to mask its effect. And I don't know. I think inflation is here to stay. I think inflation goes much higher, and ultimately so do rates, because at some point you have to pay a higher rate of return for people to want to take your debt. And I have been someone who has advocated for owning treasuries, short-term, 6-month in duration or less, and I'm beginning to even get nervous holding those. So yeah, I think the reason it's bullish on gold is because it speaks to the bigger issue of the fact that we are so far indebted, we are so far down the road, we have so little in terms of asset base. We don't manufacture anything anymore. I mean, a good example are the rare earths. We're supposedly going green, yet China refines 100% of the rare earth metals. We don't even have the ability to refine those rare earths, and 85% come from the Eurasian continent. So a lot of these things are just not thought out very well. But the bottom line is gold and silver will move higher in the face of a dollar that moves lower. And you can look at the Japanese yen as a good example. 10 years ago, an ounce of gold in yen was like 110,000 yen. Now it's like 370,000. Did gold go up, or did the yen get hammered? And the same thing will be true here with the dollar as it continues to lose confidence. This is a system that's not backed by anything anymore. It's just backed by the faith and confidence of this country. And when you talk about, and the credit, well, we're broke, we're insolvent. In terms of the faith, people look at this country as what the hell's happened to it. And then we go around the world weaponizing the dollar and stealing 5 billion in assets from the Russian regime and using it to give weapons to the country they're in a war against. So faith, credit, you could throw all that out the window. And so I think it's actually very bad, and it will do a lot ultimately for the price of gold and silver as an alternative to the system as people wake up to the realities. And most of the world already has woken up to that. People in this country at some point will wake up to the fact that we're caught. We're in between a rock and a hard place, and inflation is going to eat away. Even when we're being told that it's only 3%, you can still get 5% or 4.5% in a money market. You're supposed to be doing good. You're actually losing ground by over 7% per year, according to the real levels of inflation. So lowering rates now when inflation is already high, when stocks are already high, when real estate is already high, it's throwing a can of gasoline on top of a bonfire. It's not a good idea.
I agree. And I'm looking at my gold holdings, and they've well outperformed any kind of a CD that I could have purchased over the last, year and a half.
But you don't hear that anywhere. No one talks about it. No one would tell you that it's outpaced the S&P 500 for 25 years, which has averaged 9.6% with dividends reinvested versus 9.9% on gold. No one will tell you it's doubled the performance of the 10-year treasury over the last 25 years. And no one will tell you that if you held gold under your mattress for the last 50 years, in comparison to a 10-year treasury, you have eked out ahead of the 10-year treasury as of just recently. So it's not about return on your money right now that people should be focused on. It's about return of your money. And inflation is insidious, especially when they lie to you about its levels. And lowering rates as inflation ought to only be going higher. Ask yourself this: even if we balance the budget today, which we don't, we're spending $1 trillion every 2 months or every 3 months, 100,000 a second. But if it were balanced, we still have almost 200 trillion in unfunded liabilities and 35 trillion in debt. Who's going to pay for that? Where do you get the money to pay for that? And that doesn't take into account the 20 million people in this country illegally who are now being offered in your state free homes or $150,000 loan, zero down, zero interest, never need to pay it back until you sell your home. It's that type of stupidity that's got us where we are. And it's not getting any better, as you can see. I mean, at some point, a revolution has to happen. You throw these idiots out of office who've never done anything in business, who've never even balanced a checkbook, it seems, who are bankrupting this country and now want to lower interest rates. Interest rates are supposed to be a function of risk. And this system used to be backed by things like gold. And now it's backed by nothing. And even Vladimir Putin just said that in a speech. He said Bretton Woods is dead. The dollar's backed by nothing but confidence. And that confidence is being eroded by the day when you look at our political decisions, our economic decisions, and you look at the integrity of our country. This ain't the country you and I grew up in. And anyone who would say otherwise is lying. And I left Minnesota as a footnote to all of this, a state that I loved. I used to tell my wife, I'm never leaving, don't ask. My family's here. I've been here for 50 years. My business is here. Don't ask. And I left for a vacation 3.5 years ago, came to Florida in the midst of Minnesota being locked down to the extent where my kids in the middle of winter, had to have their friends over in our garage with a heat lamp because no one was coming inside. No one knew what the hell was going on. And in Minnesota, they scared the hell out of you. And then they let the city burn down and tell us Antifa's coming out to the suburbs, so shelter in place and don't answer your door. And I come to Florida, and there are people outside at bars singing and dancing and drinking live music and no mask. I'm like, where the hell am I? And as I land, and this was right by Silver Squeeze, right around Silver Squeeze, January, February 2021, I came here for a vacation, not to buy a house. And Governor Walz, this nitwit, who is now the VP candidate, decides to raise income taxes after he destroyed the city, locked it down, and had a budget surplus. So I called my father, he and my mom had just bought a second place down here in Florida. I said, give me the name of your real estate agent. I bought a house and never went back. And I never did it with my intentions of doing that. But the current system, if people don't vote with their feet or with their mouth, I get out here and either I'm too stupid or I have the courage to say it. I don't know which one it is. Put myself out online, but I voted with my feet and I left a state that I loved. And I look back at it now and say, what the hell's happened to this, this state? And I think if you were honest, you might, I don't know, I don't want to put words in your mouth, might say the same thing about the state you live in. And all of a sudden, this country is not where we once were. And this is not lost on the rest of the world. This is not the time to be lowering interest rates. This is not the time to be weaponizing the dollar in the treasury market. This is not the time to be going massively into debt, to be going green and antagonizing Saudi Arabia, the linchpin of our hegemony. All of the things we are doing are too stupid to be stupid. And that's why I say, could this really be planned? Could it be that our lead economic advisor, who has a master's degree in social work and a degree in music, is leading the economic policy for this country? I mean, all of these things are just, it's bizarro world. So when you talk about all of these things put together and then lowering rates, at some point you have to pay the price. If you go to the bar every day and say, put it on my tab, put it on my tab, put it on my tab, but someday you got to pay the bill. And we just find a way to keep not paying the bill and distorting reality. And this is another example of it. And by the way, you showed some coins, and the reason there are ridges on those coins is because this goes all the way back to Roman times. And in Roman times, when much like the United States, when their empire had gone all around the world and had the outreach and the overreach was so far, and they had to pay this massive supply chain and pay their warriors for maintaining the integrity of the system, they're running out of silver and gold for their coins. So they would trim the edges, make it just a little bit smaller, and take all that extra and make a bunch more coins. Well, until finally they started taking all the precious metal out of it. And the point of it is that was their form of inflation and quantitative easing. And it goes all the way back to Roman times. Every government since has always chosen this path. And it will end badly the way that every other one has, where every single world reserve currency or every paper currency has retreated to its intrinsic value, and that is of zero. And we are going down that path by destroying its value. And if you have kids right now, or grandkids, and you should pay damn close attention to what's happening right now.
I agree. I mean, it's, I look at my state right now, and I had a great year a couple of years ago, like a banner year for me, where I sold a business. And I was really hesitant in doing it because we were in a partnership. I wasn't able to put it into some tax protecting instruments at the time. We just had to take the bite on it. And 14% state taxes, ridiculous. And then to watch and see how they spend it. It's one thing if they were spending it on the roads and they were spending it to beautify the state and make it more affordable for people. No, it just goes to, $1 billion, railroad projects to go have a high-speed train from Los Angeles to San Francisco that still never came about. And it's never.
Or you could talk about Governor Walz. Look, and I want it to be clear. Like my parents were hippies, right? My house smelled like weed. I mean, I saw stuff that you could make a movie about when I was a kid in the 70s, and an older sister who was 5 years older. I mean, there was nothing that I didn't see growing up. My wife was the tour manager for Slipknot and Korn. And so, I mean, you want to talk about having no issue with people's lifestyle. Yeah. My family has no issue. I was a jock, right? I played baseball. And I went to college to play baseball, but I was okay with lifestyle. I didn't care what you did. You're my friend, right? So let's just make that clear. But Governor Walz thought it okay with an $18 billion surplus that is basically gone. He thought it would be okay to put mandatory tampon dispensers in all grade schools and high schools and junior high schools in public in Minnesota, all of them. Mandatory, just in case there were a couple young ladies who identified as a boy and had their period inside the boys' bathroom. That wouldn't be very nice. But how disrespectful is that to the taxpayer? How irresponsible is that to put all of that for a handful of young ladies who identify now as young men? And I'm okay if that's what they want to do, fine. But why have it shoved down our throat? Why? Why does it have to be put in your face? Why does it have to affect the taxpayer? I got so sick and tired of this crap, I picked up and I left, and I never came back to a place that I never wanted to leave until COVID. And I mean, nothing changed my life the way that COVID did and the way that YouTube has. And but that's an example of the kind of thinking that this guy has. He's wants to give driver's license to people in the state of Minnesota in there illegally, right? Give them a driver's license. Well, how do they insure themselves? So we'll worry about that later. And all of these ridiculous things that are very much anti-American. And that brings me back to Cloward-Piven. And I keep telling people, read the Cloward-Piven theory. And if you walk away from reading the Cloward-Piven theory without being blown away, if you've never heard about it, I'll be shocked. I mean, it was a class taught by a husband and wife professor in Columbia. Cloward and Piven were their names. And who went there? Well, Obama, Madeleine Albright, Bill Barr, our lead economic advisor, Jared Bernstein, this current nitwit chief of staff, what's his name? Blinken. All of these people went there. And the whole thing is to how to upend a United States, turn it into a socialist economy through basic universal income, through mass immigration, a loyal serfdom of voters who will never vote Republican, by overwhelming the entitlement system and the welfare system. Well, is that happening in the UK? Is that happening here? Is that happening in Canada? Is that happening in France? Oh my God, it is. It's happening everywhere in the West. And when you say, is this too stupid to be stupid? Well, let's see. Weaponize the dollar, sign an executive order to go green, and let all of the G7 Western countries implode through mass immigration and destroying the welfare system and overwhelming the system, leading to basic universal income, leading to a whole new system. And could it be? I don't know. You do the research yourself and read Cloward Piven. It will take you 10 minutes to read it, if that. Google it, and you'll say, my God, they are trying to reset the system and move to one that vilifies capitalism. I mean, you start by destabilizing the nuclear family. That's number one. You divide and conquer, and then you vilify capitalism. The rich have to pay more. The rich have to pay more. And it's just absolutely insane. Where now you have this woman who wants to impose a unrealized capital gains tax on people over 100 million. Well, these are the people that are the job creators and have enough money to say, screw it, goodbye, and get on their boat in the Caribbean and never come back and give up their citizenship and pull tent with all the jobs they create and all the tax revenue they create, just like all the companies leaving New York and Los Angeles and moving to Texas and to Florida, or even people who make $1 million a year and jacking up their capital gains. Well, most of the people say, I don't care, but it'll blow things up. If she won in November, and if you make over $1 million a year and now your capital gains goes to 44%, you're going to sell everything you got. And so will all the very wealthy.
You're going to sell it fast. You're going to collapse the economy. But the other thing too, Andy, is I look at income tax. It was supposed to be 1% for the super rich back in the early 1900s, and now I'm paying it. So if it goes to the rich, it'll come to the middle class. It'll just happen.
Yes, of course it will. That's just to get the nose under the tent, right? And that's exactly how they do it. And then you throw in state tax. I don't know what it is in California. I left Minnesota; it was 10%. So you get a top tax bracket in federal, and add 10%. And if you're a business owner, you're paying double FICA. And at the end of the day, anything over $400,000, you're paying, bringing home 35, 40 cents on the dollar. Now, that's a lot of money. I came from nothing. I started from nothing. I literally started from nothing, as did my whole family, from nothing. We borrowed money to start this company. And Miles, my dad's middle name, Franklin, his best friend, who in 1989 gave us 60 grand to start a company in a one-room office the size of a closet. I love America. I'm a patriot. I love this country. It gave me opportunities that I could not have afforded anywhere else in the world. And yet here we are. And I'm speaking out like I'm an anarchist, which I'm not. I'm just someone who's very saddened by the fact I got 3 kids, a little girl who's 17, who's looking at the world with optimism, doesn't know what's about to smack her in the face. And I hope to God that it all changes. This is just a bad cycle or a bad dream. And we wake up and all of the opportunities and the reputation that this country as the greatest place on earth has had for a long time is reinvigorated. I do. I'm sorry if I come across as being depressing. I depress myself, but there's a fine line between reality and pessimism these days. And I'd rather, for one, be able to get out of the way of a fastball at my head than be blissfully ignorant and get just knocked over by it and out cold you go. So, I think this stuff is real, man. I truly do. And look,
the reality is,
wants to figure it out if it is, because come November, we'll know.
We're going to know soon enough. But honestly, I don't think it's depressing. What I think it is that it's enlightening. To the point you're talking about, I don't have the chart with me, but Elon Musk put this out on X a couple weeks ago. And he said, you guys, I'm not like a conservative Republican. I'm someone that's been very neutral and a little bit to the left. And what's happened is the left has continued to push left, that he ended up becoming part of the right as far as it's defined today. So, forget the 2 political parties. I don't even think those parties by their boundaries really even matter that much going into this election. I think what people are really looking at is they're looking at the chaos that's being created by certain individuals, and they may belong to certain parties, but I think you really have to look at the individual person that's running and look at what they're proposing. But then you also have to look at their track record, because some people aren't very honest about what they're proposing, and they're just giving you lip service for things, right? And then you got all this gaslighting going on too. So to me, it's not depressing. It's a little bit more enlightening, and then it's trying to figure out how to get ready for it. And so kind of to that, I have one question I want to share with you real quick, and then I do want to shift a little bit over to BRICS and
Yeah, man.
to the unit, because I think that's going to be something that's going to determine our future as well. So Sir Alfred was asking ballpark horizon for dealers not accepting fiat, worthless fiat, and I think so. That's a question there, and I think the other part of that too, Andy, is a lot of places will accept Bitcoin for payment of precious metals, but will we ever get to a point like this where you have a hard time for Miles Franklin taking fiat, or do you have to have a bigger premium to cover yourself?
First of all, the way that the question was phrased is the right way to phrase it. A lot of times you'll have people say stupid stuff like, well, if you believe so much in it, why would you sell it for dollars? Well, I've been buying it every 2 weeks for 35 years for myself. Never, ever, never missed a 2 week period ever. The promise I made to my dad when I started this company. I talk about it publicly all the time. I'm more invested in physical metals than any normal rational person would be. Plus, I own a very large precious metals company. But in order to transact business in the United States, you have to have the currency of the realm, which is dollars. That's what everyone takes. That's how you buy gold and silver from the dealers and the refiners and the mints. That's how you pay the public. Yes, we do take Bitcoin, but I don't take it. I issue a BitPay link, and BitPay pays me in dollars. And so as long as there is a United States and a currency and it's legal to buy metals, that's what it will be in. When it gets to that point where, the dollars are worthless, well, there'll just be no business, no commerce, or we will switch to a new system, and all bets are off at that point. And this is why I believe so strongly in it. And, I think that you can run a very good business and still try and do right by people. And that is to tell people, look, man, if you hold all your money in dollars, you're destined to go broke. If you are not a contrarian, you will be a victim. That's where we are, in my belief. And but as far as transacting business, until otherwise notified, it's in US dollars. That's the only way that the system works. It still is the world reserve currency, even though it is waning. It's gone from 70+% to the low 50s or mid 50s in terms of percentage of reserves in US dollars. And in fact, gold just became the number 2 largest reserve in the world, surpassing the European Union for the first time ever. The euro is now number 3 in terms of global reserves. So little by little, it's happening. It will happen. One of these, I always talk about logarithmic decay, little by little, then all at once. I say it all the time. Some people give me shit for it because I keep saying it, but I believe it. And you can see the little by little happening. The lack of dollar investment, the lack of dollar holdings, the lack of treasury investment, the lack of treasury holdings, the accumulation of commodities. All these things are slowly happening, and you'll wake up one morning, and maybe it is after the announcement of the BRICS unit currencies. Maybe that's what it is. Maybe the world dumps dollars. There's something called Operation Sandman that a very smart man and a friend of mine, Mike Adams, has shared his information with me and educated me on. And it's called the Night of the Switch. It's 100+ countries, in theory, that have agreed to dump dollars and treasuries at once. Now, I started talking about that long before I knew about Operation Sandman. I just said that at some point, these countries would no longer take dollars for energy. And you can see that that's beginning to happen. Saudi Arabia said, well, we'll still take dollars, but we're not going to exclusively take dollars the way we have for the last 50 years. I said that 2 months ago. And so little by little, we are beginning to see countries move away from accepting dollars, which are being inflated, or treasuries, which have been weaponized, and moving into things like gold, which has doubled the performance of the treasury over the last 10 years and can't be taken until that one moment, whether it be by Operation Sandman, where everyone says goodbye and dumps and the whole thing implodes, or just naturally as a move away from the dollar is precipitated by something better, like the unit, which is gold backed, in theory, according to the head of the BRICS New Development Bank, Delma Rousseff. So, yeah, at this point, and to this person's question, to the point, I do believe, honest to God, that commodities like gold, like silver, like oil have become worth more than the currency used to purchase it. At some point, that will become real, I think. And then that's when things change. What does the new system look like? Couldn't tell you. Probably a central bank digital currency, if I had to guess, pegged to gold. there's no way you get people to ever drink the Kool-Aid again after you piss in the punch bowl for so long.
Yep.
No, really, we didn't piss in this punch bowl. Try it. Yeah, right.
Yeah,
so,
right.
and unless it's backed by, and this is the marriage of blockchain technology, the immutability of it, the transparency of it, with gold, which is the only other tier one asset in the world. And even the head of the IMF, Kristalina Georgieva, said, after writing a report saying gold as an international reserve currency, comma, a barbarous relic no more, question mark, she said a CBDC that's not backed by something is fiat. Well, what is the only other tier one asset? Gold. And what does it appear to be backing a new BRICS system? Gold. And, so if I had to guess, that new system the West would try and compete with the rest of the world if they were smart, and they would issue a gold-backed CBDC. And that's not too far off. I mean, look at Judy Shelton, who, if Trump is elected, ought to be the Federal Reserve Chair. And she said, the only way you'll ever get people to buy our treasuries again, think about what we've been talking about. Who the hell wants to hold a 30-year treasury backed by nothing but inflation and a corrupt government? Instead, the only way you make people want to hold it is to make it redeemable in gold. There you go. She's a smart lady. She's a gold advocate. She's an advocate for the gold standard. And contrary to idiot, uneducated, so-called smart people and economists, this country, we went 180 years on a gold standard with no inflation and the greatest amount of prosperity the world had ever seen. And so when you talk about, being able to back something with gold, even, Senator Cynthia Lummis from Wyoming came out and talking about the cryptocurrency or the Bitcoin fund that Trump had thrown out. She came out and said, yeah, I just issued a bill that talks about revaluing the Federal Reserve's gold to provide some of the money, and they're just holding it on behalf, really, of the Treasury, but to revalue it to a level high enough and to take some of it to use to buy this strategic Bitcoin account. Well, just like the guy in the head of the bank in the Netherlands, the Dutch National Bank, keeps talking about revaluing gold. I want to read something to you that blew me away and talks about this real quick, because this
well, I think it's totally relevant. We had a question just come in too. When do you think they'll revalue gold?
Well, so check this out, man. And to me, I gotta find. I stumbled across this yesterday. Okay, and I'm like, holy crap, that's it. So this is a conversation that happened. Here it is, right here. Okay, this is a conversation that happened a long time ago, and it was a conversation between Thomas Enders, who was the Assistant Secretary of the State for Economics and Business Affairs, and Henry Kissinger. And it happened in a staff meeting in 1974. And these were notes that were pulled from the meeting. And it says, America's objective, the official transcript of the meeting quotes Enders as saying, was to move towards a demonetization of gold, to begin to get gold moving out of the system. To Kissinger's question, why is it against our interest to have gold in the system? Enders replied, it's against our interest to have gold in the system because for it to remain there, it would result in being revalued periodically. Although we have still some substantial gold holdings, about 11 billion, well, that was in 1974, a larger part of the official gold in the world is concentrated in Western Europe. This gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. But that's a balance of payments problem, Kissinger interjected. Yes, but it's a question of who has the most leverage internationally, Enders answered. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. All right, let that sink in for a second. They know damn well what they're doing. Gold is held in every central bank balance sheet in an account called the gold revaluation account. The head of the Dutch National Bank said we should revalue our gold and offset our liabilities with a higher gold price. Senator Lummis said that. But this is why. They understand that he who has the gold makes the rules. China is the largest importer of gold in the world and the largest producer of it, and no one has any idea how much they have. And there are guys like Alistair McLeod who thinks they have 40,000 metric tons, 5 times what we do. And so when you talk about the BRICS nations buying up all of the gold, standing for delivery, draining the exchanges, I'll read you one more thing and then I'll answer any questions that you have. And this is about how much gold has been taken out of the system recently. And it goes to this point. They're using the suppression of our markets to drain the exchanges. So I'll read you just one thing here that I think will put an exclamation point on what I just read to you, and that is, I'm so sorry. I wish I normally don't.
Real quick, while you're looking that up, for anybody that's, show my face again for those that might be watching it. For any of you that have some questions, we are going to do a quick Q&A. We'll try to do a rapid fire one too. Go ahead and put that in caps in the comments, and then also hit that thumbs up if you haven't so far. That gets this message out to more people, guys. But we'll do some Q&A here in a minute, and then Andy,
we can do that right now if you'd like. I can skip this unless I can find it here real quick.
You can find it, and then
because it blew my mind when I read it.
Yeah, if you can find it, it would be great.
Okay, give me 1 second. I normally try and do most of this from my head. By the way, Russia is increasing gold purchases to 8.2 billion rubles per day from 1.12. That's $90 million a day that they will be spending on gold now moving forward, if that tells you anything. But let me just read one thing, which I don't know what the heck I did with it. Give me 10 more seconds. If I don't find it, we'll move on. I'm so sorry. I can't find it. So why don't you ask the questions and I will keep looking for it.
Okay, that works. So the first question comes from a super chat here. Are you hiring at Miles Franklin?
At this point, no. But I'm always willing to look at resumes. Most of the people who work for me are my oldest friends in the world, but I'm always willing to listen and talk to good people. So send it to me.
Okay, there you go. So send a resume over to Andy. Okay, another question we have, Andy, here. This is from Russell C. Hi, Andy. When do you expect silver to pass $50? Will the COMEX implode?
I think we're getting really close to the markets imploding. Right now, on the London Metals Exchange, they're trading upwards ends of 2.9 billion ounces of silver per day. That's 3.5 times annual global mine supply per day, with only really 300 million ounces backing that. The COMEX is 1,600% last time I looked, rehypothecated, meaning that each contract is 5,000 ounce bars, but they've in essence sold that contract to 16 other people. And if everyone stands for delivery at the same time, it's the same thing that happened to Bernie Madoff. He ran a great shop until everyone said, give me my money back. And then they realized, oh, it's a Ponzi scheme. So when you see, I just did an interview with Sean Kuhn from Dolly Varden Silver. He said, Andy, China's flying all around Latin America, all around. They're going right to the miners. They're disintermediating the relationship with the banks and with the exchanges. And they're buying up all of the unrefined silver in doré bar and in concentrate and shipping it home and refining it there. Therefore, they didn't buy it off of an exchange. They're paying double what the West will pay for this unrefined silver. They have much greater refining capability than the West, and they're buying it in an effort to pull everything off the table, including the unrefined silver, which isn't reflective immediately off of an exchange or off of price. And this comes from the second largest producer of silver in the world, who is now a net importer instead of a net exporter. India has imported almost 800 million ounces of silver in the last 3.5 years. That's more than is on the LBMA total. That's 20 times what is in the COMEX registered category. And so, yeah, how close are we to that happening? Like that, it could happen. It'll happen on a Sunday night, Monday morning. You'll wake up and silver will be way higher than you can imagine. I don't know when, but we live in a world of probabilities. I would say the probability of it happening is pretty damn good.
Okay, so that's a great answer, by the way. Gives us some good insight there. So another one that's kind of along those lines too. So
And
you
I
got
found it,
gold
by the
bullion.
way. I found what I was
Oh,
looking
you did?
for.
Okay.
So
So let's look
uh,
to this question. We'll get back to that real quick. So you got gold bullion. You've got things like pre-33 gold that's either raw or graded, and then you have like junk silver I've got here, and you've got things like silver eagles. Do you have any recommendations for people on
yep.
what to accumulate and maybe even percentages of like investable income to look at?
Most of my career, people bought numismatic gold coins. You can remember in the 90s with gold at $300 or 350. American Eagle would have been 5% over. So what's that, $15, $20 over the spot? And a $20 gold piece like this one, an MS62 grade, $20 Liberty, maybe 8 or 9 or 10% over. Okay, so you're talking $40 over, so $25 more for a coin that's 100 years old with better upside potential and safe from confiscation. No one bought bullion, nobody. When Obama took office, or right before he did, the premiums went parabolic. Parabolic. Everyone thought he was going to confiscate. I called everyone who I'd ever sold numismatics to. And mind you, I'd been doing it for longer than anyone. I'd been doing it since 1989. And our original business was Swiss franc annuities. And when the Swiss stayed out of the European Union and they didn't peg their currency, or they had their own currency as an export nation, I said to all my clients who had Swiss franc investments, I'm like, you got to sell right now, because they're going to let their currency collapse to defend their economy. No one will buy watches and chocolates from Switzerland if they have to first convert to a super expensive Swiss franc. They'll buy watches from France and chocolate from Belgium. And so the Swiss, as I thought, let their economy stay strong and let their franc fall, and quietly and privately pegged it to the euro, and the currency collapsed. So I told everyone, get the hell out of the franc and buy gold. At the time, they were all buying gold numismatics and $20 gold pieces at 15, $20 over a gold eagle. I had clients with thousands of them. And when Obama was about to take office, I called him up. I flew all around the country, became Diamond Elite on Delta. I said, every one of you needs to sell your numismatics now and go to bullion. And I would say, look, I'll bring you for that 62 Liberty that you bought for a few percent over a gold eagle. I'll bring you 70% more gold in gold eagles. I'll buy those 1,062s from you and bring you 1,700 gold eagles. And I will sell those numismatics to the 3 or 4 auction galleries that are as dumb as a mud wall right now, that are paying these high premiums. And I did that for 2 years. And so there are times to own bullion. And since that time, I never told people to go back to numismatics ever, because the premiums just were too high after a while. And so now we're at a point where that's kind of reversed. So okay, I would say, in order of preference in gold, I mean, you want to make it easy, buy gold eagles and buffaloes. You want the best thing, in my opinion, it's the pre-33. You'll pay a little higher premium, but those premiums are in line with bear market averages of the 90s. So they're as low as I've seen them in 20 years. They are worth buying right now. And I wouldn't go above 64 grade in a St. Gaudens, above 63 grade in the Liberty. In those grades, which used to be very expensive, where I would have paid you 70 or 80% premium to $1,000 gold price in 2008, you can buy now for commensurate to a gold eagle, or not much over it. In terms of silver, pre-65 junk silver, constitutional silver is by far the best value, period, right now, by far. And that is because during the pandemic, silver eagles were ridiculously priced, and the closest thing to them in ridiculous pricing was the junk silver, because of the utility it gives you. Those quarters give you utility. A dime is basically 14 dimes is exactly an ounce of silver. So you get 14 transactions for every one transaction with an eagle. Premiums on junk silver were $10, $11, $12, $13 over the price of silver. Would have bought them back for close to that. Now they're cheaper than all the other sovereign coins, which were all lower than junk silver during the pandemic. The best buy. My favorite choice, silver eagles. So I love silver eagles. Junk silver's the best buy. My favorite choice, gold numismatics. Most straightforward, gold bullion, American Eagle. No right or wrong answer. But if I had my druthers, I would buy all pre-33 gold and silver eagles. That would be my choice. Best value, junk silver. Most straightforward, gold eagles.
Perfect. I think that's great because it gives everybody a little bit of something from that too, which is great. Let's
Oh,
go
by the
back
way,
to
real quick, I'll just read this to
yeah.
you.
Let's go
Take a
back to that.
second when we talk about that question. Asian and central bank demand continues apace, keeping London COMEX short of physical liquidity. COMEX was never intended to be a delivery market. This is true. No one ever stood for delivery. Never. Maybe 1% before 2020
Okay.
of people stood for delivery. Yet, according to my record, since late November 2020, when stand for deliveries became a common occurrence, having been rare, some 2,136 tons of gold have been stood for delivery and 24,072 tons of silver. These are staggering figures and do not include exchanges for physical, a significant but unknown portion which were swapped for London forward contracts and then delivery taken. And we're seeing tons of that. In fact, there is a contract that is allowed to be delivered in Hong Kong where they buy a contract in the West. They stand for delivery on exchange for physical in Hong Kong, which is a COMEX facility. Those bars are always, mysteriously enough, the mini contract off a contract, the kilo bars, which are then brought to the Shanghai Gold Exchange and sent out to the countries that are probably sanctioned by the West. So, yeah, the exchanges are blowing up and they will blow up. But what's smart about these players is that they're not stupid and they slowly accumulate. They don't go too fast. And now they're even buying the unrefined metal from the refiners. They're doing all they can to drain the exchanges slowly, methodically, and over time instead of getting it all at once and the whole thing blows up and they've screwed themselves. So they're just using the system of our leverage, of our suppression of the markets to support the illusion of dollar supremacy, of Western bond market supremacy, which is an illusion. And they're suppressing the metals and they're saying, fine, well, we'll stand for delivery quietly and take everything that you can find. Thousands and thousands and thousands of tons of gold and silver are disappearing and they will never come back as they move there. And that's where they're going to stay.
Yeah, that I think that goes with your little by little by little, and then all at once. I think it's just
that's
going
what
to
it
happen.
is. And the all at once
you're able
comes
to
when we see force majeure or there's no one stupid enough to sell at the Western prices. And that's when you see Shanghai, Dubai, and Moscow exchanges take over and exert more of a realistic marketplace that is not leveraged and fractionally reserved and a scam, the way that Bernie Madoff's whole program was. And it will be looked at that way in the end.
Yeah, I agree. So, your dad's advice I think is very sound. It's what I've been doing as well. And that's just accumulating, right? And it's making sure I get a purchase in every couple of weeks. And to your point, I'll pick things like I was just at the Long Beach Coin Show and we bought this off of someone that was needing to liquidate. So we got a great price for it. Now I can flip it into something that I want, and there'll be a little bit of a spread for me on it. But I think the key, guys and gals, is to be accumulating and getting it at a pace that works for you and your family, and keep doing that. Andy, we've had you here for an hour. I don't know how much time you have. More questions.
I'll take a couple more Q&A. Let's do it.
Okay. All right. So we're going to rapid fire a couple of these that are in here. So here's the first one. Andy, do you see Professor Vinny's article in Rush about Russia selling oil for gold?
I didn't see that, but I mean, that's what they're doing. I mean, oh, he's talking about Vinny. Yeah, yes. I know. Yes, he's talking about Vince Lancy. I didn't know who Professor Vinny was for a second. Yeah, I mean, that's what they have been doing. That's what they will be doing. They're taking gold and they will ship it over to China, which then gets put into a bank, which then allows them to transact business, sidestepping the sanctions. Absolutely, that's what they're doing. Gold is being remonetized across the globe. It is replacing things like the dollar because of this weaponization. So yes, that is something I have seen. It's something I believe that they are doing and probably have been doing for a while. And by the same token, in reverse, countries that are accepting the digital yuan, like Brazil selling corn and soybeans to China for yuan, that's immediately convertible into gold on the Shanghai Gold Exchange. So yes, I think gold will be increasingly, and that's why it's part of the new unit ecosystem. Gold will be something that will be increasingly be used in settlement of things like energy in particular. So yes, I have seen it. And yes, I do believe it's happening.
So you guys, I think it's just going to pick up from there on that. Okay, here's another one from J Hawkeye 61. Will there be a difference in whomever gets elected?
Yeah, hopefully. I mean, hopefully. I'm not with the dollar. The dollar is in big trouble either way. Trump is. I mean, even Vance echoed the idiocy of Jared Bernstein. Maybe having the reserve currency is not such a privilege after all. He's talking about sanctioning 100% of the countries, like those that want to work with the BRICS, and he advocates for super low interest rates and a weak dollar. That's not what we need. That's what got us here. So, what Trump will do, I hope, God willing, is reestablish law and order and the sanctity of this country and of the institutions that are supposed to be meaningful, like the FBI, like the Justice Department, like the electoral system, like the immigration system, like the inner cities, like the lawlessness, like the wokeness, all of this crap that I can't take anymore gives me hives. That's what I think he would do. But as far as the currency and the system, until we find a government that will stop bankrupting us by spending irresponsibly and irrationally, the dollar's dead. But in terms of gaining respect and allowing us to at least find a form of a semblance of a common ground, the lack of unity makes it difficult to do that. I would hope that people would see past that. If Trump would just shut his mouth and not say stupid things, I think a lot of people would really like his policies. Unfortunately, there are people that won't even listen to his policies because they hate him so much. And it's this divisiveness that is bad. But in my heart of hearts, I think he needs to get elected or we're in big trouble. And less for the economic side of things and more for the way we are viewed globally and the safety of the people in this country. Look, 20 million people are in here illegally, right? And if 5% are pissed off at this country and want to do bad things, that's a million people. I was just on a podcast with Robert Kiyosaki before I was on with you, and he said, "Look, I have a friend who works for the Israeli intelligence and said that you have Hamas and Hezbollah that are setting up sleeper cells all throughout the United States, and they're waiting." And is it true? I don't know. Robert just said that to me on the podcast I was on. And so is it true? I don't know. But I mean, this nonsense of letting people in this country illegally has to end. And, it's destroying what this country is all about. And it's destroying the ability for us to ever fix our fiscal house. And so I don't know. That to me is more important right now than the irresponsibility of our monetary and fiscal policies. Is at least getting law and order and a semblance of the American ideals, like the nuclear family, like respect for your parents and for your teachers and police officers and things like that. That's just gone wayward. I mean, who would have ever thought in a million freaking years that Venezuelan gangs would be terrorizing apartment buildings in Colorado? I mean, right? Really? What? And so I just think that's the kind of stuff that needs to be fixed. And that's what I'm hoping Trump wins for more than anything. But the currency, the dollar, we're in trouble.
Yeah, I agree. And everything you hit is really good that you just hit on, because I think there's some people that believe that if Trump gets elected, everything gets fixed. It's not that simple, guys. It's going to be hard. No matter who.
We have to pay the bar tab. We have to get and that comes first by getting our house in order. Once that's in order, then we can fix the bar tab, and that will require going through some tough times. And it should have been done in 2008, just like that fire right now, because you come back after that fire 5 years from now and it will look as healthy as ever. It sucks over the 5-year period. There's death and destruction and sadness, but in the end, that's what must be done when you mess with Mother Nature the way that we have by suppressing interest rates for 20 years, creating these distortions with easy money and low interest rates. You've messed with Mother Nature, and Mother Nature always wins in the end, and I think that's something that doesn't matter who wins. We have to deal with that down the road.
I agree. So I got 4 more quick questions for us on here. This one I think is pretty relevant. This is from Sir Alford again. Has a good amount of Fort Knox gold been leased away over the years? And
who knows? Hasn't been audited since 1953, I believe, which lends to the conspiracy theories of that being the case. Many people would say they leased it to support the gold suppression scheme, which would be to sell treasuries, take the sell gold, short the market, drive the price down with the gold that you lease out to the commercial banks like Goldman Sachs or JP. So you say to JP, here, take $50 million worth of gold or $1 billion worth of gold, and we'll lease it to you at 0.5%. You take that, you short the market, drive the price down. You take the proceeds and you buy treasuries, earning, at the time 3, 4, 5%, whatever, and you can earn the spread. You'll keep the spread between the lease and that. Now, in doing that, you drive the price down. You drive interest rates down by buying treasuries. You support the bond market. It's all illusionary. And then, by selling short and driving the paper price of gold down, you keep the price down. So you can cover that short. You make the spread. If you're the commercial bank, you're happy. If you're the Federal Reserve, you're happy. Everyone wins, except, in the end, the people and the gold miners. But this is all real as far as I'm concerned. And to his point, is there gold at Fort Knox? Why the hell would Ron Paul be vetoed twice when he tried to audit the gold at the Fed? I mean, at Fort Knox. So, conspiracy, reality, fine line. Don't know. But if it stinks like crap and it looks like crap, it probably is crap. So, yeah, I would say that there's a good chance that not all that gold is there.
I'm going to guess that with what the BRICS nations are doing, sooner than later, we're going to find out.
Yeah, well, of course. I mean, and by draining the Western exchanges, and with gold being revalued as a tier 1 asset, we will find out at some point. So these are reasons why, another thing that Kiyosaki said today publicly. So I don't have a problem saying this. He's like, I just did an interview with RFK Jr. and he knows who killed his father and his uncle, and he wants to tell the world. Trump said if he gets in, he said, and it wasn't a lone assassin, and if he gets in, he'll release that information. So there's a lot of conspiracy reality stuff that, is it true? Don't know. What do you think? And I think a lot of people who think about it would say, no, the gold's gone. No, it wasn't a lone assassin. All of these things that we've been gaslit into believing. Who knows? I mean, I don't know. I'm just simply saying that if it were the people's gold like it is, then why not just go ahead and show it? What are you hiding? And that's the troubling part. That's why it lends itself to conspiracy theories.
Get some of your own gold, because you're going to probably need it when that happens. Okay, a couple other quick ones here. Do you believe the government will once again institute helicopter money or larger amounts more frequently, as some of the textbooks suggest?
I mean, you want to mess with Mother Nature some more? Yeah, sure. Why not? I mean, that's what quantitative easing is. Basic universal income, maybe. At some point, again, this massive inflation, it's going to have ramifications. I mean, if you ask our vice president, it has nothing to do with that. It has to do with greedy grocery store owners, and that just goes to show. See, the thing is this: inflation 100% of the time is a monetary event. It is an increase in the money supply, period. You increase money to give it to the people, you are creating inflation, which there's something called the Cantillon effect. The Cantillon effect says that the people closest to the money have a disproportionate privilege or value in being close to the money, that it takes a few years to work its way down to the people. So if you look at that, all of that money created, who was closest to it? Well, Wall Street, the hedge funds. They could take money, borrow it at zero, and buy Bitcoin and buy commercial real estate or residential real estate or gold or bonds or Nvidia or Apple, and phew, goes to the moon, and they can get out and sell and let that money go back into the real economy as prices are inflating. And by the time that stuff leaves the assets and they're enriched on their yacht in the middle of the Caribbean drinking martinis, that money filters its way down into the real economy, and gas and food and eggs and bread and everything else and rent is expensive as shit. So the person down at the bottom is disproportionately affected by the money creation, the inflation. And this Cantillon effect is creating a large gap between people who got it and people who have nothing. And it's the people who are closest to that money spigot, Wall Street, and the elite, who have been able to maximize its effect, because the wealthy are usually cash poor. Their wealth is in assets. They have assets that go parabolic. They don't have a lot of money in a bank account. They don't want to sell their assets. They got art and cars and homes and gold and silver, and yeah, they got enough cash to do whatever the hell they want, but cash poor in a relative sense of the word based on their wealth. So that's the Cantillon effect, where they take the cheap money, buy assets, and by the time that all that money creation filters its way down to the public, it's already created mass inflation.
Thanks, Andy. Last question that I want to ask here today is this. We've got a question from Gerald Drake. I'm going to show two of them, and I think they're both relevant, kind of the same thing. One is there really a difference between type 1 and type 2 silver eagles in the future? And the other thing I think here is, if we go into a gold standard, will it matter what kind of a coin we use? And I think you hit some of these a little bit earlier when you were talking about your allocation, not allocation, but the coins or the bullion that you like. So we kind
First of all, I want to say
to
Jake's Custom Parts is one of the greatest guys I know, and I love you, Jake, and thank you for the kind words. Type 1, type 2 would delineate that prior to 2021, June or July, silver eagles had a different design, and gold eagles. It's a different design, but there's also a security notch where the ridges on the coins each year they move. They don't put one ridge in, and they move it around. And it's really weird. They haven't really told us much about what that security feature is, other than the fact that it's a missing notch. And it's very hard, I guess, to manufacture it that way. We've x-rayed the coins and done all sorts of things. There's no chip in it. Bix Weir will talk about sometimes diamond dust, a technology that 3M has. It's like a fingerprint. And he thinks in theory, identify every single coin under a microscope if it came, or some sort of a reader if it came time to use it as legal tender. There are 11 states right now who have passed legal tender laws, upwards ends of 20. I'm the U.S. contact for Glint, and Jason Cousins, the head of Glint, has been working with 20 plus state legislatures to reintroduce sound money. There is a clause in the Constitution that says states cannot create their own money unless it's species gold and silver. So all of these states are talking about accepting gold and silver coins as legal tender, like American Eagle coins. I think having U.S. minted coins is a good idea if we see a transition into sound money. So would it matter? In most of the legislation out there says any coin issued by a sovereign mint. Some says only U.S., like Oklahoma, I think, does. I think Texas does. I think maybe Arkansas. I'm not positive, but some of them say only U.S. If I had my druthers, it would be U.S. coins, either pre-65 constitutional silver or silver eagles, and gold eagles, or the pre-33. But as long as it's U.S. minted coins, I think you're probably best off.
Okay, awesome. So for anybody that's watching that wants to pick up some more gold and silver, how do they get a hold of you and Miles Franklin? And I guess if
they want to, we have a new website and a brand new one that will be done any day now. I'm not going to say tomorrow because every time I do it, it takes longer, but a brand new one. But we don't really encourage people to buy off our website that often. In fact, the prices are there just for very small purchases. You can send us an email, say that the Stacking Surfer sent me in the subject line, and ask just for our price list if you want. No obligation. Those prices will be as good or better than anyone in the country. Any questions that you have, or comments, or 401k conversion or IRA conversion into precious metal IRAs, anything, put your phone number down, ask to be contacted. No obligation for any of it. You just want the price list? Let us know. info@milesfranklin.com. Drop us an email. We'll respond right away. You want to be contacted? You don't want to be contacted? You just want the price list or any questions, or those directed to me? Go ahead and send it, and we'll get right back to you.
Yeah, I've liked working with your team, Andy. So everybody's been very polite. Everybody is smart. They know what they're talking about. You're not dealing with some kids that you hired to do telemarketing stuff. So
no, most of the people who work for me, not only are they most of them my oldest friends since childhood and later in life, up through college, but many of them had distinguished careers, Wall Street careers, degrees from Wharton or from Temple University in business administration, masters in business administration, own their own companies, sold them to venture capital. Distinguished people who can talk with you about everything we've talked about here. They're not order takers. And I really think, some people just would rather not talk with people. That's fine. I get it. But I think where we're going, man, I really do think where we're going, relationships will be important. And
Yep.
And that's what we're good at. And it doesn't have to be a long conversation, but certainly, it would behoove you, if you want to buy metal, talk to one of our people. We'll make it worth your while. Very low pressure, highly educated, and we only try to get people the most amount of gold and silver for the least amount of premium. Nothing fancy or esoteric. You want numismatics? Our prices are killer, and so is our understanding of it. But typically, we focus on bullion content while maintaining liquidity. In other words, it's better to have 100 1-ounce rounds than a 100-ounce bar, and it might be better to have 100 silver eagles over 100 1-ounce rounds, arguably with the state legislation. These are the kind of things that we'll talk with you about and help you weigh those decisions yourself.
Awesome. Well, Andy, thank you very much for your time. I know we kept you a little bit longer, and hopefully you'll be able to get a little rest today. I know you've been on the circuit today, so we appreciate you coming.
All right, my man. It's all good. I'm going to attempt to do my own live stream tomorrow night.
Oh, awesome.
The first time I've ever done one, and I'm actually going to get some help right now from my friends at Liberty and Finance who are going to show me how to actually do what you're doing right now, because I'm kind of lost. I'm a little freaked out by that, but we'll see what happens. It'll be tomorrow night at 9:00, and keep your fingers crossed I don't screw it up. But I love our conversations, man, and I look forward to picking up where we left off. And thanks for having me. And ought to be some good entertainment with the debate tonight, so looking forward to that as well.
Yep. Thank you. Thanks, everybody, for coming.
You got it, brother.